Hi, I'm Mike Weller with Keller Williams and SoCalShortSaleSolution.com. I'm coming to you today because your bank has filed a notice of sale, which is basically the last step in their foreclosure process. They have set a sale date to bring your house to foreclosure, and they're ready to proceed with the foreclosure. If you've been working on a loan modification, this usually means that you're probably not going to get a modification, even if you haven't been denied by them necessarily, and even if you call them and they say that they're still reviewing your file for the modification. If they've gone this far, if their foreclosure department has gone this far, chances are you're not going to get a loan modification. And I know that's difficult for some people to internalize, or as difficult information for some people to stomach, but chances are that if they filed a notice of sale, you're not going to get a modification from them. So the sooner that you're able to realize that and be proactive about taking care of your situation, the better you'll be and the better your family will be in the long run. So really at this point, the three main options for you are to do nothing or try to continue with the loan modification, which means that they're going to go ahead and foreclose on your property within the next 30 days. And then the two other options that will buy you some time are bankruptcy or a short sale. And for some people, bankruptcy could be a good option. If you have a lot of other debts, if you have a lot of collections, it might take care of all of those things. You'd really need to speak with a bankruptcy attorney to figure out if bankruptcy might make sense for you. Keep in mind that bankruptcy won't save your house from foreclosure, but it will buy you another 3 to 6 months, however long it takes to get that worked out in the bankruptcy court. Short sale is another good option that will also buy you, on average, the same amount of time, 3 to 6 months, maybe sometimes longer, depending on how the short sale goes. The bank typically will suspend and postpone the foreclosure sales if they have a short sale file that they're reviewing that's been submitted to them. So if really the only problem in your life is your house and the mortgage, the short sale probably makes more sense to you than some of the other options like bankruptcy. Let me talk to you a little bit about what the short sale entails and why it might make sense for you. The number one thing is it saves your credit. It's definitely better on your credit than a bankruptcy. You'll be able to go out and still get credit cards, and you'll be able to buy a car, and you'll be able to get other credit in the future, and the credit won't cost you as much in the future as it would after a bankruptcy. The bankruptcy is going to keep you from buying another house for at least 4 or 5 years, and it stays on your credit report for 10 years, so it's a really rough thing. The short sale, under Fannie Mae guidelines, you're eligible to buy another house in 2 years, and everybody in the industry thinks that in 2 years prices certainly are not going to be higher. If anything, they're going to be a little bit lower than now. So a good financial decision a lot of times for a lot of people is to work with their bank on a short sale, go and rent someplace comfortable for a year or two, rebuild the little bit of credit damage that's been done, not even so much by the short sale, but by the fact that you've missed some mortgage payments to this point, because that's what hurts your credit more than anything else. And then come back in 2 years and buy another house at a much lower price. So that's a good financial decision for a lot of people, depending on their personal situation. The other thing about the short sale is it allows us the opportunity to settle your debt with your lender. California, just in January 2011, passed a law saying that a first deed of trust, meaning a first mortgage, if they agree to a short sale, there cannot be a deficiency judgment. That means you're totally released from the liability on that. As far as if your bank goes ahead and forecloses on you, depending on the kind of loan you have, they may be able to sue you, file what's called a deficiency judgment, and sue you for the difference between what they've recovered through the foreclosure and what you owe on the loan. So, and the foreclosure is, that hurts your credit so much as it is, and then to have to deal with a deficiency judgment lawsuit against you after that, it's just one bad thing after another. So probably something you want to avoid. The short sale is a really good way to avoid that too. And then the other thing is there's a lot of good short sale programs out there now. Wells Fargo and Wachovia has a program where they pay $2,500 up to $5,000 in most cases actually to work with them through their fast track program, which I can tell you a little bit more about. Pretty much all of the big banks, Bank of America, Wells Fargo, Chase, Citibank, you name it, they all belong to the government HAFA program, which also pays $3,000. So that helps a little bit with relocation costs. So you might as well get a little bit of money out of the situation too, in addition to being able to buy yourself another 3 to 6 months in your house. So there's certainly a lot of good reasons at this point to try to facilitate a short sale and to consider a short sale. Everybody's situation is a little bit different. I'd be happy to sit with you, totally no pressure, free consultation where we can go over your options and see what makes sense for you. Again, my name is Mike Weller. I can be reached at 714-989-6176, SoCalShortSaleSolution.com. Mike Weller, 714-989-6176. Look forward to hearing from you, and best of luck to you. Thanks so much.